Hey, thanks for joining me. I wanted to talk about today how inflation can impact your investments. Now, it's interesting because usually after a recession, which we've been through, inflation usually raises its ugly head and we start to see an acceleration take place. That may not be the case as we go into 2014. We're actually seeing crude oil and gasoline prices come down, which ironically is starting to show equities in the transportation category to start to move up. In addition to that, there's probably about 8 core reasons as to why inflation may not take effect next year. Some of those reasons are, and let me just run down the list: moderate to slow real growth, high unemployment, declining total consumer debt, low unit labor cost gains, increased usage of low-cost natural gas, slower emerging market growth, potential for tuition to go level or actually down some, and healthcare may also remain low. So keeping that in mind is that if inflation is not in the picture, that's a big positive for equities in the stock market. So I want you to keep that in mind as you're reading going into 2014, due to the fact that so many times we focus on corporate earnings of different companies. But overall, the economy is not seeing price increases take place, and therefore that gives corporations the opportunity to really expand and grow their products, their services, as well as their innovation, and to embrace technology. So we are going into this next year believing fully that the equity markets have strength behind them for numerous reasons, even though we've heard negative news out there. I wanted to bring this to your attention because so many people have been out there projecting that inflation would raise its ugly head, but it could very well be that we're still years away from that. So keep that in mind, and know that as we at Five Plan Partners are making recommendations to the portfolios, we're very concerned about overall bond positions. And in addition to that, though, think equities could still have more upside to them due to low inflation as well as other things. If you're not having a conversation with your financial advisor regarding inflation and its impact, again, that could always be a red flag. Here at Five Plan Partners, we're starting that dialogue now and already talking about strategies and the what ifs within 2014. I appreciate your time. Appreciate the way you continue to forward these vlogs to friends and family. And I also appreciate all the emails I'm getting saying, hey, I would love to hear this as a topic. Thanks again, and I look forward to sharing with you in the next vlog.